Hey, welcome back to the Mining Pod. I'm on the road for OpNext, our Bitcoin scaling conference, but I'm ripping a pod from the hotel room with Colin Harper, our EIC over at Blockspace. We're going to dive into the Bitcoin mining news from this week, so stick around. We've got tons of stories. Hashprice is pretty brutal, and we're also going to go around the globe, talk about Bitcoin mining in Pakistan, and of course, a cry corner on the Ethereum ecosystem. So stick around. Hey, this is Will with Blockspace. Did you know that we're selling BitAxe Bitcoin miners now on miningpod.shop? If you're interested in having a BitAxe sit on your desk, or maybe you want to orange pill a friend or a family member, go to miningpod.shop to get industry-leading pricing on BitAxe units. If you want to buy them for your company, maybe as a holiday party gift or something else, feel free to reach out to us at hello@blockspace.media to order a custom bulk amount for a discount. Again, that's miningpod.shop to order a BitAxe today.
The hat's coming off. It's time to get down to business.
The hat is off. What is the phrase with whiff? The hat stays on. Today, the hat stays off. So we're going to dive into this, that, and the other thing. We're going to start off with this piece from our friends over at the Miner Mag discussing Hashprice. But of course, first we need to share hash rate index. Go check out hash rate index, one of the best places to look at different metrics within the Bitcoin mining ecosystem. As of this morning, things are pretty rough, Colin. We had that story last week. A lot of people were like, we're at 1 zettahash for Bitcoin mining. Not really, just kind of like wicked up on a lot of dashboards. Truly, we're around 900 exahash. That being said, the more important metric is hash price, which has been hovering around $40, even dipped lower than $40, which was a low since September of last year. This is a really key metric for Bitcoin miners, especially the public guys that we have information on, because they're basically at break even. And I'll share some stats from the Miner Mag piece, which came out this morning, Thursday morning. We're recording this Eastern local time, but I'll give you a second to chime in here on any of the metrics we're looking at.
Yeah, miners getting pinched on both sides from hash price. On April 5th, we had a pretty large upward difficulty adjustment, and it tanked hash price from about $46 or $47 per hash per day down to 43. And then Bitcoin had its Sunday sell-off last weekend as it kind of lagged the rest of the market from the Friday sell-off we saw a few days before in response to tariffs, and it dropped all the way down to like $39 per hash per day, which is a level we haven't seen in some time. It's since recovered along with the broader market, but we're still at like 43. And as we'll show here in a second, that's really creating some thin margins for some of the leading public miners. If we just look at their hash costs on a direct cost basis, and that's not even including their SG&A and financing costs. And the last thing I would say about the hash rate read for people saying 1 zettahash, a lot of the dashboards still only use real-time hash rate, and that's derived from block times and current difficulty, so it can be very unreliable depending on the variance that we see and how quickly blocks are coming in and luck. And you heard it here first, folks. It is not official until it is 1 zettahash on the 7-day. Some would say on the 14-day, according to difficulty, the difficulty schedule. But we'll probably get 1 zettahash sometime soonish. I do think the tariff stuff will delay that further out than we would have had it otherwise, because a lot of US miners are going to be kind of hitting pause on some of their expansions, as we'll talk about here in a bit.
Yeah, so we're looking at this chart from the Miner Mag, and this shows hash costs across a bunch of different public miners that we have either monthly or quarterly updates on. Probably this is mostly quarterly, because I'm seeing Galaxy in there. Actually, the whole chart right there, it says quarterly, so duh. Anyways, hash cost is around $40 for everybody. So that's how much revenue are we bringing in for Bitcoin mining? It's hash price. And then how much is it cost to mine that? Cost of goods, basically. And, your break even, that's before SG&A. And a lot of these miners have huge SG&A costs. So right now is really, really tight for Bitcoin miners that are at least public. Private miners, we're assuming, could be even in a worse place unless they have cheaper energy. So not a great place for the market. Like you said, though, Colin, we did see like a little rebound this morning, back up to $42 per petahash per day. And a lot of that's because Bitcoin price also rebounding. I believe this morning we're over 80K once again. And so that sort of helps bring some relief.
Yeah, and this chart really contextualizes how hairy it is right now for these miners. The only miners that have a direct hash cost, and when we say direct, like that's just based on, I would assume this is how I would do it. I think Wolfie does the same thing. This is based on cost of revenues. So the cost of revenues typically only include like on-site labor and your electricity costs. The only miners that are below 40 right now are CleanSpark at $30 per petahash per day, IRN at $29-30 per petahash per day, and Cormint, which I don't know where he's getting that number from.
They publish it themselves.
Do they? Okay.
Even though they're private.
I would take that with a grain of salt. Maybe these are based on the actual reported hash cost, but I don't think that's true because, like, I know, for example, BitDeer doesn't actually report theirs. They have the highest here at $73.30 per petahash per day. But currently, right now, only 2 of the public miners that Miner Mag tracks have hash costs below break even. And, obviously not where you want to be. And just to highlight what Will said just then, too, this does not include SG&A. And a lot of these miners have very heavy SG&A costs. Their payroll and their executive compensation are pretty high on a dollar basis, not a share basis. So you would see this even higher if it weren't for just the direct costs. So
it's pricey out there, but it's important to do those SG&As, right? Got to have those podcast sponsorships. That's what it's all about. That's why we're here. Let's go to this tariff piece, though. So you wrote an awesome original article in the Blockspace newsletter, which everyone needs to go subscribe to, newsletter.blockspacemedia.com. You can find a link in the show notes. And basically, you went through the mad scramble, as one mining executive put it, heading into the Trump tariff deadline, which was, I believe, yesterday. It was then called off. So it did make the article still accurate in the sense that, like, the chaos, you wrote about the chaos that was happening in the hours beforehand, but the situation changed so dramatically after Trump changed that. And we saw that reflected in the markets, right? Where the markets absolutely ripped upwards, and it was one of the highest one-day gains in stock market history after the almost essentially full tariff reversal, except for on China, which Trump pushed it up to 125% rate for the tariffs. And then there's also a 10% rate across all different countries that went across the board. So not the reciprocal, which, we saw everything from like low double digit to high double digit tariffs on random countries. Let's pull up your article, though.
Yeah, so a complete scramble is right. That's according to Ethan Vera, CEO of Luxor Technology. And the framing for this piece is basically ahead of the April 9th deadline, which is now moot because, as Will said, the Trump administration is putting a 90-day pause on its original tariffs and also reforming the rate down. We'll talk about that in a second. But ASIC brokers and Bitcoin mining software and services companies and Bitcoin miners were chartering flights at 2 to 4x the usual rate, anywhere from 2 to 3.5 million per flight. I even saw a figure thrown out, 3.8 million. So these miners were trying to get ASICs out of Southeast Asia as quickly as possible in order to beat the tariff deadline. Now, as I understood it, according to Ethan, if you had anything contracted before April 5th, when the tariffs, I believe, were formally announced, you would not have to pay the tariff. If you had anything contracted between the 5th and the 9th, you would pay like a 10% tariff, and anything after the 9th would have been subject to the previously proposed reciprocal tariffs. And those tariffs were anything from 24% for Malaysia, where a lot of machines are fabricated, Thailand at 36%, Indonesia at 32%, and Taiwan at 32%. I don't believe any ASICs are actually manufactured in Taiwan. And also, I would say that the semiconductors were originally exempt from this previously announced round of tariffs. So that wouldn't have made that much of a difference. But the other big one was China got slapped with 104%, now 125%. That's going to have huge ramifications for network gear, electrical infrastructure, right? A lot of Bitcoin miners source transformers from China, so those would get insanely more expensive, potentially double the cost. And that was really the focus of the piece. Was we had Ethan Vera, who was on last week on the Mining Roundup, to talk about potential impact of tariffs, and also Taras Kulik of Syntech talking about how this is going to make Bitcoin mining, at least in the near to short term in the US, uncompetitive. US miners would be sourcing rigs anywhere from 20 to 36%. They'd be sourcing rigs that are 20 to 36% more expensive in the US. And they assume that, and this stands to reason, right? It makes sense that given that you're going to see international expansion take off in favor of other jurisdictions rather than the US in the short term as a result. Because as Ethan put it, if you're paying upwards of 36% for hardware, a premium on it compared to your international competitors, you're just not going to have the edge that US miners have traditionally enjoyed with some.
You're going to have a bad time.
Bad time, not a good time to be a US miner. And just to contextualize how much the US was importing in prior years, these are based on estimates that looks at Bitcoin network hash rate growth and also kind of backs out the US share, or how much miners would be importing in the US by looking at the share of hash rate that is in the US based on a number of estimates floating around, like one from Hash Rate Index, and then taking the price of the new gen machines that were being sold at the time. If we take all of that, and take it with a grain of salt, because this is, an estimate, it's not an exact number. But, last year, miners imported roughly around $2.33 billion worth of hardware. 2023 is $1.74 billion. And in Q1 2025, maybe $680 million. So it's a lot of commerce moving hands. And this would have had, the prior tariffs would have had a devastating impact. There are still tariffs being proposed. So there's the 90-day pause, and Trump has said that after that, it'll be 10% flat tariff on all the trading partners except for China, who will have that mammoth 125%.
Except for China.
No China.
No China. 125% for China.
So that 10% definitely easier to stomach. I think that would, depending on the miners' power costs and some of their other costs, they could still be competitive at that rate, but obviously it's going to drive up costs for them and make it much more difficult to expand. One last thing, if those 10% tariffs hold, or if we go back to the other tariffs, which you don't really know with this administration, right? They've been ping-ponging around with these, what we should expect to see too over the next year or so, I guess, in Bitcoin mining in the US. Mergers and acquisitions will probably ramp up because it might just be easier for you to go and find a turnkey site than have to deal with importing machines and greenfielding something. I think that's something to kind of look out for as we approach Q2, or approach the rest of Q2 here.
How many years of life do we think our ASIC broker friends lost over the last few days just dealing with the stress of trying to get these ASICs? Awesome article. I encourage everyone to go take a read on it. It gives you a lot of insights into the muscles and sinews, as you like to put it, of the Bitcoin network. These people behind the scenes who are actually building Bitcoin mining sites, and all the mad scramble they had to put into the last week. It seems like crisis is averted for now, but I think the pitch, last thought I'll give on the story, the pitch of the Auradines and the proto miners of the world is a little bit more palatable to Bitcoin miners this week than it was last week. And I think the urgency for Bitmain, MicroBT, Canaan, and others to continue onshoring efforts into the United States is more palatable than ever as well.
That's a good point to bring up. And one thing I will say to clarify with Auradine, I don't know about Block, but Auradine still manufactures, I think, the majority of their ASICs in Southeast Asia. MicroBT and Bitmain do have at least one plant each in the US, but it's not nearly enough to cover all of the demand that would be coming out of this region. And the other thing also, right, the raw materials, almost all of them are probably coming from overseas, right? We don't do any aluminum smelting over here anymore. The control boards are all coming from either Chinese or Southeast Asian companies. So, I mean, I guess the one silver lining is the semiconductors are exempt. So it's like your most expensive component for the ASIC, if you are building it in the US, isn't going to be slapped with a tariff.
It is interesting. I mean, I've heard anecdotes of in certain parts of China, in these manufacturing zones for technological gadgets and gizmos, you can go into the street corners and there's just vendors selling like hats for Bitcoin miners, like the control boards. They're just like in the street. You can just buy them. And I think that just kind of speaks to like how much Bitcoin mining manufacturing is still located in East Asia, specifically in China. And there's a long way to go before it really takes place in the United States or North America in general. These manufacturers spend a lot of time moving to different jurisdictions. And I think that them getting caught off guard by Trump putting a tariff wall on all of the world was pretty shocking because, they moved to Malaysia, they moved to different spots down there, and they spent the last few years doing that since the last Trump administration. They got slapped around. Let's go to talk about Bitcoin mining stocks for a second, and then we're going to finish up talking about Pakistan and their Bitcoin mining ambitions, and then our Cry Corner. So yesterday, as I said, we had one of the largest reversals in stock market history. So we had one of the highest drops on Monday in history. And then after the tariff reversal and the pause, we had one of the highest gains in history. And of course, Bitcoin mining stocks are no stranger to the roller coaster, but this was on yet another level. If you are watching on CoinDesk TV or YouTube, you can see the chart that Colin has up here looking at a bunch of different Bitcoin mining stocks: Riot, Mara, Hut 8, Cores, more, and then Bitcoin as well. As of this morning, so yesterday we had the huge gains. Most things were gaining, it looks like, into 7% plus territory, as high as 14%. But as of this morning, recording on Thursday, things are kind of going back down to the slip and slide where we're down across the board 5% plus for Bitcoin mining stocks. And I think that just speaks to the uncertainty right now around Bitcoin, and then also just to the economics of some of these mining stocks. Who is really interested in buying a Bitcoin mining stock at the moment when the economics are so weak? We're kind of hitting that point where the financials don't seem to make a lot of sense in purchasing these things. But maybe you have a counter take, Colin.
Not really. I mean, I think that you have a few things working against miners at this point. There's AI and HPC market appetite. Investors have a lot of their mind share there. That's why we've seen a lot of miners, everyone from like Cores to Hut 8 to Bit Digital to Iron, pivoting to to those business lines. Even Riot is seriously considering developing the rest of its 600 megawatt Corsicana facility and potentially retrofitting Rockdale and the first phase of Corsicana for AI and HPC. So that is, when you're seeing other miners do that and you're an investor, you would have to ask yourself why your privileged or your pet Bitcoin mining stock is not doing the same thing, right? Especially when you consider that the revenues for that and the margins are potentially much higher. And there's also not the same cap on those revenues. Like AI and HPC doesn't have a difficulty adjustment. There's not going to be, as long as there's demand, the demand is increasing, then your ability to keep your slice of the pie or grow it increases, right? Whereas with Bitcoin mining, unless you're constantly expanding all the time, you're not going to be able to maintain the same level of revenues that you had a year ago, given the way that difficulty reacts to hash rate growing. And just going back to the market volatility piece too, I mean, it's like the butterfly meme. Is this a cup and handle? Like, is this bullish? This is just some insane price action because you just see this total canyon here from, over the weekend. So these stocks dropped, not over the weekend, excuse me, over the last few days. This is the 5-day. See these stocks drop on Tuesday, and then they opened yesterday with a quick dip, and then they just surge. Hut 8 was the leader of that rally, according to the stocks that we have right here. And I mean, this just kind of speaks to the broader market too. No one really knows what's going to happen day to day. The Trump administration is saying one thing and then reneging on it a few days later, completely reversing course. Definitely not a comfy time to be a miner or in one of these equities, I would say. There are just so many headwinds. And at this point, too, I was writing about this for a newsletter we're going to put out on Blockworks this week. There are a lot of factors that are pushing against Bitcoin miners at this point, whereas previously they acted as, high beta plays to Bitcoin and gave people exposure to Bitcoin when there were no other alternative instruments, institutional investors and the like. They still serve as a high beta play, but you have the ETFs now. So, and you also have things like Coinbase that, might be a little bit of a safer or at least a more direct play on Bitcoin specifically, and they're losing their correlations to Bitcoin. If you actually look at like the last few years, these Bitcoin mining stocks have been increasingly less correlated with Bitcoin price movements on the upside, but they are sharing still on the downside movements. And when you see something like that, you do ask yourself, like, what is the benefit of owning these miners unless you have one of the best, right? If you have an absolute winner, or one that can actually produce Bitcoin below market cost. And I also just think, last thing too, that maybe doesn't get talked about a lot, the market is just so saturated at this point. Back in like 2020, 2021, there were like 8 to 10 Bitcoin mining stocks, and they had the ability to basically hoover up more of that investor share that was looking to get into the industry. Now there are like 25 or 30. And so you're kind of having all of that, all the allocation is kind of being diffused across all these different miners. And the kind of like crazy gains that we saw, for instance, Mara have last bull market, that's getting spread out, or the capital that would be pushing that stock price up is getting spread out across all these other miners now. So despite our friends in the mining mafia, we love them. It's hard to be bullish on these Bitcoin mining stocks. Obviously, if Bitcoin goes up, they will go up too. But the magnitude of returns that we saw in previous cycles, I don't necessarily think that we're going to get those from here on out.
Womp womp. Wet blankets here in the mining pod this morning. That's okay. You know who is bullish on Bitcoin mining? The country of Pakistan. So let's jot around the globe, Colin, and talk about that before we close out show for the day. This came from Reuters, and as Colin and I were talking about this internally yesterday, apparently there's a rumor about this, which, I didn't hear it. For once, I did not hear a rumor about Bitcoin mining. Pakistan turns to Bitcoin miners, AI data centers to use surplus power. Continues to read, Pakistan plans to allocate part of its surplus electricity to Bitcoin mining and AI data centers. The head of Pakistan's crypto council and advisor to the finance minister said on Wednesday, adding it had held talks with several mining firms. Pakistan's energy sector is grappling with challenges, including high electricity tariffs and surplus generation capacity. The rapid expansion of solar energy has further complicated the landscape as more consumers turn to alternative energy sources to mitigate high costs. Now, of course, there was some news the other week that also was interesting for us in the crypto ecosystem more broadly, which was CZ, the former CEO of Binance and now basically just large bag holder of Binance, is being or was tapped as an advisor for Pakistan. That was notable in the sense of bringing someone who is probably one of the better brands and is one of the bigger spokespersons for crypto writ large. And the fact that they're looking at Bitcoin mining makes sense. The one thing I want to draw attention to is the solar power part, right? So like in Texas, we have tons of different renewable energy sources, a lot of natural gas as well, but the wind has been sort of the big thing that's pushed a lot of Bitcoin mining there, where in West Texas, there was all this generation was brought online for this push from renewables. Bitcoin miners started flocking to these renewable sites where they weren't using the energy. And even if they were able to use the energy, it was one, too far away for bringing it back to Dallas or Houston. And then two, is kind of at the wrong time of the day, right? Because the wind is blowing and those electrons are available midday when people are at the office and they're not at their house. And so you kind of have a problem there. Seems like Pakistan's having the same problem. Bitcoin miners are able to step in there. They use that energy during the day and then they can turn off or partially shut off at night while everyone is turning on their electric grills and their blow dryers. Colin, your take on the story?
I think you're going to start seeing more nation states actually seriously consider Bitcoin in terms of monetizing otherwise wasted energy. I mean, this is something that Bitcoiners and miners have talked about for a long time. The wheels are finally starting to be set in motion, though, and it's just a natural fit, right? I'm of the mind that in the long enough time frame, the largest miners in the world will either be JVs with energy companies or the energy companies themselves. And just another kind of story to contextualize this, it's not just Pakistan. In France, the primary or the state-owned electrical utility, EDF, is potentially looking at Bitcoin mining to soak up extra electricity at their nuclear sites. Now, like, that's basically just he said, she said, right? I think one of their ministers said that they were open to that idea and that they would think about it. There's not anything substantial going on currently, but it's just a great example. I mean, if France ended up doing that with their nuclear, that would be a huge signal to the rest of Europe for these utilities to potentially use Bitcoin mining to monetize otherwise wasted energy, and would be a really massive pivot, I think, for the EU. EU has not been friendly to Bitcoin, yet individual countries adopting a Bitcoin mining strategy for their energy, that would be a really kind of like sea change or a seismic shift, I think, in attitudes towards it in those countries. Because like right now, the only places that are competitive to mine Bitcoin are like Northern Europe, largely because those electricity prices across the EU are like much higher than what we pay in the US. That being said, if you're the utility, you're not worried about prices. Like you set the price. So you're going to use it when you want to for energy that you otherwise can't dispatch. So just something to keep an eye on over the coming years. I'm generally pretty excited about things like this. And as you know, we've seen Bhutan, right, is using Bitcoin mining in partnership with BitTier for some of its hydroelectricity capacity. So like small little baby steps currently, but I mean, if you had told me this 5 years ago, I would have been like, that's crazy that Pakistan or Bhutan are mining Bitcoin.
I mean, Texas was the case study, right? Like Texas had a problem. They didn't have enough generation. The grid was unstable. There was deaths associated with it, right? Where we had that catastrophic event in February 2021. Bitcoin miners came in as they built out new generation. Bitcoin miners were able to help develop the grid, bring in some stability, even just a little bit. I mean, it was only 1% of the grid as of like 2022. But that 1% is meaningful when you need it, right? When you have that demand for that extra 1%, that's a few 100,000 homes that are actually going to be heated because Bitcoin miners turned off. So that case study of Texas, I think, can now be exported globally into countries that are also having the same problems of one, not enough generation, and two, unreliable grids. And as they build out generation and as their grids need to stabilize, you can just plug in Bitcoin miners and you can plug in basically unprofitable machines. You know, all these machines, these old S19s that are kind of being circulated out, they'll probably find a home in a country like Pakistan. We already have case studies of that happening in different countries like Ethiopia and Venezuela and elsewhere. And so I think what you're seeing here is a new narrative for Bitcoin mining, where Bitcoin mining is going to help bring about the great restoration, or not even restoration, creation of energy grids globally for countries that otherwise would have to have government intervention in order to actually build out stabilized grids. That's like a kind of a storyline that we've touched on older Bitcoin mining podcasts, notably with the gridless guys, is that in the United States, when we built out the grids here, it was largely through government intervention. Like governments came in and they electrified the Tennessee Valley, right? They electrified things during the 50s and 60s with the Great Society Project from Lyndon B. Johnson. And that basically was taxation. And as a libertarian, a lot of people think that's theft. And then reallocating those resources to energize regions. And I think the ends probably justified the means there. But with Bitcoin mining, you have kind of that missing link that a lot of people didn't have before, which is like we can build a generation and we always have a base buyer when there's no one demanding electricity. So I love this Pakistan story. I think it's something to watch. Let's riff over to our last story, which is a fun one, our Cry Corner. This is Eric Balkunis over at Bloomberg. He's a senior ETF analyst. And as you can see on screen, if you're watching, the best performing ETF this year is the negative 2x Ether ETF, ETHD, up 247%. The number two is the other negative 2x Ether ETF. He says, I was sure it was going to be UVIX, which is a 2x VIX, so basically kind of tracks the volatility. But that's number three. Brutal. Just to translate for those who might not understand, the inverse 2x levered ETF for Ethereum is the best performing ETF so far this year. So if you were really short Ether and you wanted to have some sort of vehicle for it, you are up quite a bit. I thought this was great. And as we've covered in the newsletter, Colin, Bitcoin is up something like 40% over ETH year to date.
Yeah, Ethereum ETH just can't get a break. It's getting crushed. It's getting crushed right now. And I'm just going to pull up the ETH Bitcoin chart here on
so brutal.
What's wild is it round tripped its gains against Bitcoin from the last bull market. So if you had invested in Ethereum 5 years ago, you would be in the negative compared to Bitcoin. Ethereum outperformed Bitcoin last bull market. A lot of that had to do with a lot of DeFi activity, and Ethereum really had most of the mind share last bull market. There was a lot of money to be made in DeFi protocols and all these different tokens that were kind of a new crop of ICOs. So much so that I remember multiple people parading around on Twitter calling for the flippening where ETH would overtake Bitcoin and all of these, kind of highfalutin fantasy ideas that it would end up kind of unseating Bitcoin as the top crypto asset. Well, ever since 2021, really, or 2022, I guess you could say, was when the downturn really started. ETH has just been getting absolutely blown out of the water by Bitcoin. Right now, it's dropped below 0.02 BTC per ETH. And if we look at it on a percentage basis, let's just look at it on the yearly. Yeah, it's down 62.6%. So
brutal.
The moral of the story here is don't move to proof of stake. It's actually kind of funny. The top for, or not the top, but it was, when ETH was still at a relatively high, valuation compared to Bitcoin, was in Q3 of 2022. The merge was September of 2022, and it's basically just been down since.
Yeah.
When you have a core proposition for a decentralized currency like proof of work out of the equation, when you have copycats and imitators like Solana beating down your door with other DeFi applications, and by the way, it's faster and it doesn't break as much, there's not really an investor case for Ethereum anymore.
It might break more, but they just are like, they're kind of shameless about it and just roll out updates really quickly. I think for me, it's like more about expectations. It's like less about the like proof of work versus proof of stake. It's more about like what narratives did you have? And ETH had this narrative of we are moving to proof of stake. It's going to be XYZ. Everyone comes up with what the value of that was going to be. There's like technical true things that proof of stake did bring to the table. And then there's the things that people in the market said about proof of stake. And both those things can kind of get conflated, whatever. But you had like this expectation of it happening. And that happened. And then afterwards, people are like, okay, what's sort of next? Everyone has this. I mean, it's the same thing for sports teams, right? It's like, what have you done for me recently is the question. And I think for Bitcoin, like it's kind of in that spot right now, honestly, since Trump won. Everyone was like 100K, Trump's going to win. Like that's probably going to happen. And it did happen. We hit 109. Since then, it's like, Bitcoin, what have you done for me recently? And that's when you see the Max Kaisers of the world start coming up with new narratives. I think for the ETH camp, there's a little bit of disillusionment. It's unclear how involved Vitalik is these days. It's unclear who really cares about like the new thing. DeFi, still impressive in some ways, but also not a ton of activity there at the moment. NFTs basically kind of washed out, even though they're fun. Stable coins are a huge narrative, but like, I don't think anyone's getting out of bed in the morning and be like, I want to go work on stable coins. Like, it's just not, it's probably the most important thing, honestly, besides Bitcoin, I think, that's come out of crypto. But it's not really something that people are like waking up and super excited about. So,
and it's not moored to a single chain either, right? Ethereum had the majority of stablecoin volume in prior cycles, but now I think it's Tron is the primary blockchain that they're being issued on, like for USDT.
Yep.
So,
and there's like there's an app chain narrative around stable coins, which I don't know, it's a whole other podcast, but there's a lot of debate about that. If people are interested in stablecoins, go check out the recent Gwart show with Guy, the founder of Athena. It's probably one of the most interesting podcasts I've listened to in the last year or so. Really, really in-depth thoughts on like how stablecoin markets actually work and why Tether is actually the most dominant stablecoin. Really was stuff I'd never thought of before, but yeah, ETH is in a weird spot. Like there's a lot of soul searching at the moment, and the soul searching continues.
A lot of soul searching, SOL.
Nicely done.
Unintentional pun there.
Well, Colin, we can wrap up. I'm going to throw my OpNext wizard hat back on. So if you are listening to this, you can go check out our live stream for the OpNext conference. We are here. I am here. Colin's back home. But in Tysons, Virginia at the MicroStrategy, now Strategy headquarters for OpNext, the Bitcoin Scaling Conference. We are live streaming talks for 2 days. And if you listen to this in time, you might be able to make it down to Tysons, Virginia, show up, buy a ticket, enjoy food and good Bitcoin conversations. And if you're at home, there's tons of Bitcoin talks from new opcodes, new scaling designs for Bitcoin. We're going to have custodian talks from Coinbase, Bitwise, and more. So dial in. You can watch on Bitcoin Magazine's Twitter handle, or you can head over to the Bitcoin Season 2 YouTube channel and watch that on that channel as well. And then we'll have clips and stuff coming out next week. Colin, anything from your side of the country before we close out?
Nope, that does it. Enjoy the live streams, y'all. Everyone have a good weekend.
Peace.